WTF. The last time this pattern played out with Bitcoin on the left and the S&P on the right, well, things didn't turn out so well. So when Jerome Powell meets this week and the FOMC decides on Wednesday, we're going to have a very interesting takeaway. And notably because if we look here to the S&P, we now have a slightly lower high for 3 months in a row, specifically 565, 564, and then 563. So failure to make a new all-time high right now is really, really important. And that's basically what we're going to walk through this weekend. So stay tuned. I think we have a great show for you. For this week, a lot of people think we're going to go up. So that gets me concerned we could actually go down. Because generally speaking, when we get closer to 60, retail is usually wrong. We're also going to go through and look at some Fed interest rate information, including what's happened the last few times the Fed has cut, how long they waited, and how restrictive they are. But basically, as of right now, it's a 50-50 coin toss between a 25 and a 50 basis point cut. All right, so you showed me this pattern at the very beginning. Now, could you explain it again really fast? All right, well, at certain moments in time, I found Bitcoin to be fairly reliable. So here we have a slight downtrend, which just means lower highs. And then we have a number one, that's the high. We have a lower high. We form an inverse head and shoulders. If we form an inverse head and shoulders to recapture, right? To recapture the 50 DMA. We see that right here. And then we go up to number 3, right? The third lower high. Well, after that third lower high, things don't turn out so well. We go all the way down for a dead cat bounce. We blow out the recent low and we go down to a new low. That would mean we're pretty much going to go down right now, go all the way down here. And that could almost be a retest of our previous all-time high. Because look, if we form a lower low compared to last month, well, things look pretty bad. That could be a back test all the way to the previous all-time high. So it's not that I want this to happen. It's just that, like, yeah, FCK, right? We don't want that to happen. No, sir, not at all. All right, so in only a few minutes, that's really what I wanted to show you. I wanted to show you that this week the market should be going higher. So if we don't, and we're basically sitting right here on resistance, we don't buy resistance. What do? We're receptive to maybe moving higher. All right, 2 more quick things before we push forward here. Just that we also talked about 2 scenarios, and this will be in a link in the description if you want to go through and read it. Scenario number 1, we make a new all-time high, we backtest and buy the new all-time high. Or scenario number 2, which started to unfold, we lose 550, which is our pivot, and then we got to be receptive to go all the way down to as low as 511. Again, the notes are right here. Pause the video or go to the link in the description, which will give you access to this board. For today, we're clicking on the weekend review, and I'm just going to go through the notes. Everything's on here if you want to go through and read it after, though. All right. So for now, if we're not going to make that new all-time high, well, it's going to be this week. So the double top. Actually, one more thing before I forget here. So let me pop back to the S&P because I think a lot of people need to understand that there's always going to be fear and greed. So if you were like, yeah, I feel so good all the way up here on our first all-time high, but then when we go all the way down, you're like, oh my God, what happened to my account? I hope I can just get my money back. We got almost to the all-time high, but not quite there. And then if the second dip scared you at all, you need to consider trimming here. Because of why? Well, I just showed you. If number 3 is right, like we're going to go lower than the last time. Again, if this plays out, we're going to talk about exactly what that would mean. It's going to mean weekly and monthly charts are going to get broken. But for right now, this is really simple. If you love your account here, but hated it here, you should consider trimming while we're back up here. That's just what you should do. That's what I would suggest. So right now, when you have a chance to wait, if we can't form that all-time high, like just be very receptive to that by the end of the week. Okay. So we have this economic data coming out on Wednesday. That's the midpoint of the week. Europe's going to be down to 2.2. That's basically right back down to target. The worst week since, right? This was from like 2 weeks ago to what? The best week since. Best week in 2024. That's right. This was the best week of the year. S&P adds $1.3 trillion over a 4-day rally. We talked about the Bitcoin pattern. And again, I hope I'm wrong. I hope this doesn't play out, but I don't like to trade based on hope. I like to trade based on a plan. So what do? Well, we'll go through that right now. But first, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. I told you these notes are on the Trello board, link in the description. But basically, the S&P and QQQ are both closing at or near the high of the week, which means we're likely to get another higher high. The question is whether do we remain over that previous high at 564 for SPY and 477 for QQQ. So as we talked about here, going back to our weekly chart, hey, if we can't go to 566, like how are we going to go to 600? We're not. That's it. We're going to stall out. We got one lower high and one right here, one higher low, one higher low, one higher high. So if we can't go higher a little bit, how are we going to go higher a lot, like past 600? Exactly. That's what the note basically says. Wait for us to go up a little bit before we go up a lot. If we get above these areas, 564 and 477, we're re-entering blue skies. If we don't, it's likely a failed breakout. Again, if we form that higher high, that's my assumption here. Watch for the higher low versus the lower low. So what I'm mentioning there is like, hey, if we don't hold here, like we could go all the way down to 525, maybe even, God forbid, down to 520, or maybe even 504. And on the monthly chart, there is no damage on the chart until we lose 510. That's 50 points lower. So if we could go lower by 50 points and not do damage, and the upside here is like literally a couple of points, the risk reward's not good right now. So reminder, we should make a new all-time high. Failure to do so is really bad. That's Bitcoin versus the S&P. And the FOMC decision is going to be going into the second half of the week. So what am I basically telling you? All right, let's make this so simple you can't ignore it. Every week that we close at or near the high or the low of a session, what usually will happen is follow through. Note that last week it did not happen, but going back to an expansion here, closing at or near the high of the candle, there's almost always follow through momentum. We keep going higher like a staircase. If we close at or near the low of the candle, like we do here, what happens? Well, we usually go lower. So as of right now, we should go higher. And if Jerome talks on Wednesday, that's going to close out the first half of the week as we go into the second half of the week. And into the second half of the week, if we fail to hold this week's high, that'll be a fail breakout. That's a fail. It's another double top, right? On the monthly chart here, that would be a double top. 565, 564, 563. We're within $1 every single time. So it's literally a $1 lower high. That is not bullish until we get over it. If we get over it, we have to hold it all the way into Friday. That's what I'm talking about there. All right, let's go through a couple of notes here. So what's up next for stocks? Again, at least according to one Deutsche Bank analyst, focus soon to shift to the close to the U.S. election. Historically, we get a 4 to 5% pullback in October, and then after the election's over, we rally. That's what I just told you about on the monthly chart here. So again, it's not that I want it to happen. It's that I'm receptive to it, and I'm seeing parts of the recipe here, like retail, that tell me that, hey, if they think we're going to go up, maybe it's time to go down. Right? I'd love for us to go higher. I'm almost fully invested again. Here's the key dates for this week. Pause the video. It's really Wednesday. So we're going to find out what happens, but European CPI is like a 2.2. So like the Fed is definitely behind. We're perfectly back at neutral. We have a 50% chance for 25 or 50. So at this point, we have to watch for the reaction to everything this week, because pop, flag, pop, flag, pop. Now we want to get back above 50, and specifically, we want to get into greed, which means that now with the S&P closing back above its 50 DMA for how many days is this now? We got 3 days in a row. That was ingredient number 1, and then ingredient number 2 was that I wanted to see us get back here in a neutral. Well, we are. We're almost right back in the middle, 50. So now we got to form a higher high. We got to get higher here. Pop, flag, pop. This means we got to go into greed, and probably extreme greed. The market's been happy the last week with a couple of different areas that are getting hit, like financials and some health. But the market's actually not terribly expensive right now. If we were to drop by 10%, we're basically back down to the 10-year average. We're not that stretched. Russell's fairly priced. NASDAQ, S&P, and Dow, roughly 10% above their 10-year average. So if we pulled back by 10%, or again, one more time, just to make sure this is drilled in, if we drop by roughly 10%, which is roughly 50 points, and we come back down to 510, we're going to be right back here to a 10-year average. So that is support. That's where you want to be strong. You should trim now if the idea of going back down to 510 scares you. Trim some here, and God forbid, maybe you buy some back at 510. Again, please remember, I'm not a financial advisor, can't tell you what to do, but this is what I am doing. And I've gone through that on the streams in the morning. Now the Fed must decide if a quarter point is enough for workers, right? Oh yeah, look at Jerome. He's going to have to decide. Right now, Bank of Canada is set to start jumbo rate cuts. They've already cut twice. Now they're looking at 50 basis points before the end of the year. They're looking for a jumbo or a 50 basis point cut before the end of the year. So that would be 4 cuts, and the Fed hasn't even started. Dudley sees the case for a half-point cut at the next meeting. He used to be the former New York Fed chair, and what he says carries weight. And this is after we got to find out if we can actually massage the soft landing. OpenAI fundraising set to catapult the company to 150 billion. They're getting 5 billion in credit and 6.5 billion in equity. Whoa! Here's Jensen, Nvidia CEO. The demand on it is so great, and everyone wants it first, and everyone wants the most. Yes, that's why companies are commanding extreme valuations, right? 150 billion, yeah, from only 100 billion not that long ago. And OpenAI is now launching a new model called Zero or O1, whatever, internally called Strawberry. It's going to have human-like reasoning. Oh my goodness, can handle complicated tasks like math and coding. Watch out, your juror might be at risk here. And China chip companies are IPOing, including Biren. And ironically, Biren about 2 years ago was actually ahead of Nvidia. So right now the race is on, and we got to ask ourselves whether we're at the innovative, early adopters, early majority, late majority, or laggard section. Because everyone thinks AI is like late into the bubble. I happen to think we're early. I happen to think we're now maybe going into early adoption, maybe somewhere early in the curve here, which means, hey, the majority of the money is still to come. All right. So with all that in mind, there's a couple of quick things, but maybe I'll go through this week. Right now, the Fed is too restrictive. The Bank of Canada is going to go by roughly another 50 by the end of the year and probably 25 per meeting. The Fed's behind, right? They're behind the curve. So behind the curve, Fed mistake. Not everyone's going to be happy with what they do. But historically, in terms of how long they pause, that's what's much more important. Everyone's like, oh, well, the precedence of a 50 basis point cut means we're going to get a recession. Yes, with 2 data points. Look, the longer they pause, the more it hurts. 6 month, yeah, recession. The recession's the gray area. Small pause, small recession. Big pause, big recession. Small pause, small recession. They've paused for the longest amount of time ever. Tied. Couldn't think of the word tied. There we go. It's tied for back in 2008. So I don't really care about 50 versus 25. Let's not be too restrictive. This is actually 1.1. They're over 1% too restrictive. Look at how long they pause. Look what happens. Massive recession. Is that what's happening here? Is that the gray bar or the outline of the chart is trying to show us? Yes. Pause the video, read the notes. That's basically what it would show you. Right now, the economy is also quite strong. So right now, we're looking between 2 and 2.5% for real GDP growth for Q3. That's pretty good. So the Fed has to now ask itself whether GDP is now above the rate of inflation, because if it is, they're too tight. It's that simple. I think I had one more infographic in here. No, I don't. The definition of a soft landing is basically having inflation below the rate of growth. Well, right now, look at the inflation's going to go to 2.2. And I just showed you here, growth is at 2.47. They're at risk of making a mistake, a critical one, because they have a soft landing in sight here. All right. So with all that said, again, watch this pattern going into this week, and then maybe you want to subscribe to the channel or come hang out with me at 9:15 to go through everything else on Monday. Thanks so much.